Welcome. Welcome back to this channel. This is Unfiltered Forex with me, Clement. And in this video, we're talking about a stock called NetEase. Name is not even here. What's here, you can see it's a game. It's called Marvel Rivals. So this game was produced or rather made by NetEase Studios, and it was a partnership between Marvel and NetEase. The game is number 9. Yeah, top 9 most played game in April 2025. That is this year, based on the number of monthly active users. Right. So it's a shooter game developed by NetEase Games that can be played on Windows, PC, PlayStation, PS5, Xbox Series. Right. So the game was published by NetEase Games on December 06. So this NetEase company, that's the one we're looking at. And you can see it was published late last year. Let me pull up some statistics here. All right, so this chart is showing number of Marvel Rivals players worldwide as of February 2025. We started with 10 million players in the first 3 days of the launch. Remember, it was launched on 6th December, and you can see here this is 9th up to 9th December. So the first 3 days, it's already reached 10 million players, and currently it's at over 40 million players. Yeah, this is February data. Yeah, over 40 million monthly players. Let's begin looking at what this company is and what they do. As you know, first we have to go to the investor relations website. NetEase IR, then click. As you can already see the Chinese characters here, this is a Chinese company. Yeah, NetEase is a Chinese company and they are heavy into gaming. Yeah, so this is their investor relations website. Yeah, you can see it's not as presentable as the other ones, but yeah, featured items. This is where you want to be in, and then look at the investor presentation. So this was first quarter 2025 investor presentation. This was the earnings release. Right. Scroll down. Market snapshots. Shares standing net cash, net revenues. All right. This is something I am looking for. In a few, you'll understand why I highlighted this stock among many others. You're going to see. So before we get there, you can see games and related value added services, net revenues and gross margins. You can see most of the revenues is coming from online gaming. That's where most of their business is, accounting for 95%, 98% of their Q1 earnings this year. Online games, PC games, you might have heard of some of these. Mobile games, some of them are quite common even outside of China. And you can see licensed mobile games from overseas developers. This is Minecraft. Now, the Chinese version is NetEase that provides it to the China market. Right. Uh-huh. Yeah, you can see this highlight here. Marvel Rivals topped Steam's global top sellers chart shortly after its season 2 update in April 2025. So this game is still undergoing updates, is not yet fully developed, but so far so good. The reaction is good from the market, and it seems to be putting NetEase at a really good spot, even financially. You can see part of their businesses, cloud music, innovative. You can go to the investor relations website and check these metrics if you are that interested in them. Anyway, this is not, you can already see we're at the end, balance sheet summary. There's not much to this company except that they are heavy into gaming. They on into in the business of online gaming, they are big. All right, so now let's go to look at the stock. NetEase. You can see the logo here is a Chinese company. Intrinsic value $117. So it's kind of overvalued by now. That's what this metric is saying. But for some time, actually for a long time in the past, in the recent past, it was undervalued. Like you can see here, yeah, late last year, it was below, even below $90, below $80 at some point. Yeah, it was highly overvalued. And you can see how high the intrinsic value is according to this platform. So, yeah. At the moment, it's currently overvalued. You can see there has been a big spike recently. This is, of course, after they announced their earnings and they were really good numbers. So, yeah, you can see how the stock has been rising in the recent past and it's likely to continue going higher. All right, moving on. This company is huge, is very, very profitable. Like it's in the entertainment sector, especially in gaming, there are not very many companies that have such good numbers. You remember the recent video I did about Take Two Interactive, which is the company that makes GTA and Red Dead Redemption and some other the 2K series like the NBA 2K. Though they have those big names, the company is not profitable even, right? So yeah, but you can see with NetEase, yeah, it's not even all that's a very common or very famous company, but their earnings are very, very strong. They're usually very, very strong. And once you get to the financials part, you're going to see exactly how strong they are. So, yeah. All right. Let me scroll down. Company overview. China. It's a Chinese company, Chinese gaming company. That's the summary of all these things, right? And also diversified its operations to include online education, e-commerce, music streaming, services like Youdao. Yeah, they have other businesses in China, but outside of China, the the main business NetEase has is gaming, right? Financials. Now this is where it gets really nice. You can already see how good these charts are looking. Let's put quarterly. No, in fact, let's do annually so you can see, you can have a better view. This is since 2015, and their revenues have been growing every year since 2015. Even when during the COVID pandemic thing, their revenues didn't drop, they still kept increasing. And yeah, it's a really solid company financially. Net income, they have always been making money for over the past 10 years. You can see this $6 billion in 2015 net income. So you can already tell this is a big company and they are good at what they do financially. And you can see even since that time, all these years, this company has been raking in tens of billions of net of income every year, right? Operating cash flows strong, very strong. Earnings per share still very strong. If you check quarterly, same same thing. This company is very very stable and they're growing at a really solid pace, and that's why you can see even for some time back here, their intrinsic value was perceived to be so high, higher than what the price was, the stock price currently was at the time. Yeah, this is one of those stocks where if you buy them early, you are actually getting a good bargain. Like, but currently you can see it's almost at its fair value. Yeah, but anything below $100, this stock is a really really nice stock to buy. Even currently, it's still nice to buy, but maybe not in the short term because you can see this there has been a sudden impulse here, which maybe not. It can be price may consolidate for a while going forward. But yeah, back to the financials, you can see how strong the financials are. Yeah, that's why late last year, somewhere I was releasing my stock picks for 2025. This was my top pick. All right, when you get to the margins, you're going to see exactly how strong the margins are. Balance sheets 196 billion and 57 billion in liabilities. Assets. And you can also see how good their balance sheet is. This is 70%. 70% of their balance sheet is pure cash. This is what you want to see in a company of this design. You remember Take Two Interactive, the GTA company. like it was, I don't know, 70%. It was the opposite. 70% of their balance sheet was intellectual property, which doesn't usually translate to much when the company is actually having financial troubles, you see. So this company having this much cash, this tells you these guys know what they're doing, right? Efficiency, free cash flow margin 36%, right? Now get to the margins. You can see all these margins. They're all double digits, meaning this stock and this company, they're really doing what they're supposed to be doing. This is now a serious company that you can invest in its stock because you can see how strong the financials are. And if the stock is going to do well in the next 5 or 10 years, this is what you need. This is the determining factor, the financials, right? You can see 28% operating margin, net margin 28%, free cash flow margin 35%, and the margins are still kind of improving, though they have been experiencing some, I don't know if I call it volatility, but they've been shaky some time past here. This is around 2018, 2021, but currently the margins seem to have stabilized and probably improving. But you can see the gross margin overall has been constant between 70 to 50%. Yeah. You can see currently it's at 62 and it's been rising over the past few years. Yeah. So once you see a company has such solid financials, you automatically know the stock is a buy. Now, what you need to know is if you're going to get a better deal at some point, right? Like you can see here, the stock price has been appreciating quite significantly over the past few weeks. So if you buy now, there's a chance that there may be a pullback. So even if you're buying, you don't go all in at the high unless you're really thinking long term, like 5, 7 years. But if you're thinking in the next 1 or 2 years, you can buy, like you can deploy half your capital at this level. And then once the price stabilizes, like if this shock actually gets corrected gets or if price continues sideways and then preparing for another price leg upwards, then at that point you can deploy more of your capital. But at this time, it's safe to deploy only some of it. It's not a point to go all in at this time, this price. All right. So back to the margins. Yeah, you've seen this is return on equity, return on asset, return on invested capital. Solid, very solid. I don't know if there are better words to describe what you're seeing here, but yeah, this is very nice. So fundamental scores, you can see profitability score 74. This company is hugely profitable, right? I think later I'll do a video comparing NetEase and Take-Two Interactive, so you can see why it's not just about the hype and how big the brand name is, but the financials are actually what are important when it comes to investing in a stock, right? Yeah, I think later I'll have to do that. So solvency score 85. Wall Street price targets. You can see 167%, 167. That's the target here. 122, this is the average forecast, and this is the lowest forecast, 96. So this 96, it was actually there just a few months ago. Yeah, actually 2 months ago, around April, it was already below $90. All right, below $100. So that the lowest forecast is actually just very recently where price is coming from. So even the ones who are bearish on the stock, they're not all that bearish on it because of how solid this company is. And you can see the bull case here is only a 39% upside, but it's likely that it may go higher if the overall market conditions are good enough. Like if there's a revival in the economy of China, and even if just the global market starts to pump, this may benefit from that tailwind. Right. Dividends, yeah, this company, they pay dividends, you can see, but yeah, these days no one invests in a stock to earn dividends because, yeah, the stock prices appreciate so much in such short time that the dividends don't look attractive. That's it for this stock. It's a really nice stock to buy. I have some shares of it, and probably next month I'll buy some more in case we see this price jump, either corrected or we see a consolidation. I may add some more. But you can see, yeah, if I told you I bought this stock last year on December, you can see where price was here at around 80, 76, 70, $80 here. Close of last year around December. Yeah, that's when I bought it. And so at the moment I'm up on that position. I can't show you now. I haven't logged into that portal on here, but maybe sometime later I'll show you. Otherwise, that's it for this video. I hope you've understood, and don't forget to like. And if you have a question, you can ask in the comments. And that's it. Have a lovely day.